Hello guys. Right, in this short webinar, or you can call it a tutorial or something, I'm going to highlight what we discussed in our last week's meetup. So this presentation is mainly for those students that didn't manage to come through to our personal interactive lessons last week in Cape Town, and for those guys who didn't attend our introductory lesson on the platform, I'm going to highlight the main aspects of the platform that you need to be able to be doing when you open your MT4 chart. So I'm gonna start by summarizing the basics of the MT4 charts that we discussed, so that you know how to navigate your way on the chart. And then later on, I'm gonna talk about the candlesticks, how and why do they matter in our analysis. So hopefully we can be able to cover up a bit on this tutorial. So now, looking at the MT4 chart, for those that were not in the class, right, as you can see my mouse right now, it's currently with a pointer. That's the one you get here on your top left corner. That's the cursor. This is the one that helps you to move around the chart. And then next to the cursor, we've got the crosshair. This helps you in pinpointing price levels in relation to the date and time when that happened. So the crosshair basically tells you the price level, the time and the date, and it also tells you how many pips are in the range that you are highlighting. For instance, if I'm to take this crosshair from the price level of say 1.023 all the way to 0.96, that means there's 546 pips, and there's 42 candlesticks from my first entry point where I highlighted the crosshair to the position where I'm in at right now. So there's like 547 pips, and the price there is 0.96. So the crosshair gives you more information of the point where you are on the chart. Like if I move the pointer here, it can tell me that the date was 28 January 2019. You can see down there on the time frame. And then the price there was 0.99. So this is basically tells you more information about the price, the date and time, and the number of candlesticks. Now, next to the crosshair, we've got a vertical line which you can use to highlight certain prices on the chart. Then you've got the horizontal line, which most people use to draw their support and resistance on the charts. Then we've got the trend line. Next to the horizontal line, we've got the line that we use to draw a trend line. This is the one that we use to draw a trend line. So you mark out your points. Let me draw another one for you from this point to the next point, and then extend it. Remember, a trend line is a line in which you draw between two lower lows or higher highs, and then you extend that line. You can clearly see here, like what I've done here. I've drawn from this high to this next high, and then I just extend it. This one I draw from this low to this low, and then extend it. You can clearly see what happened when the market broke the trend line to the downside. Market tumbled. So if they had broke to the upside, then you expect market to rally to the upside. So that's a trend line. And then next we've got the equidistance. We've got the equidistance channel. This is an advanced trend line 2, whereby you can draw lines, 2 trend lines that are equal from each other. You see, you can draw 2 trend lines that are equal from each other. So the distance from the lower trend line to the upper trend line is equal across the trend lines. That's a equidistance channel highlight. And then next to that we've got the Fibonacci levels. Right, this one we didn't go much into detail about it because we are going to have a lesson on its own. The Fibonacci retracement levels, we're gonna have a lesson on this once we have covered up most of our institutional supply and demand curriculum. Then we will move to the Fibonacci levels. These are very powerful tools to use. And then next to the fibs we've got the text, draw text. This is whereby you want to highlight a certain price area on the chart. Then I'm gonna write test here, and then I'm gonna choose my color, you see, then I'm gonna put test here, then I'm gonna drag him to wherever I want to highlight. So this helps me to like monitor certain price points so that I also do not forget, you see. And then we've got a label. Okay, next to the text we've got draw text label. Then I'm gonna draw my text label here. I'm gonna say rich. Then I'm gonna choose a different color, say blue. You can play around with the font and everything. Then you've got your rich there. Then you can place it where you want it to be. So this helps you in having like it's like sticky notes on your PC. This is like the same version of sticky notes but for MT4, and they'll be placed on the chart. They'll be like there on the chart. And then next to that we've got the tools that you can use to highlight certain areas. Let's say you've got a price point that you need to monitor from the lower side. You can place an up arrow. Then you've got a down arrow. You monitor that price zone or highlight. You want a tick, you see. So it's tools that help you in navigating your MT4 platform. Next we've got the time frames. We've got M1, M5, M15, M30, H1, H4, D1, weekly and monthly chart. Right, currently I'm on a daily chart. What does this imply? This implies that every candlestick on the chart is 1 day price movement. Like this last candle here, this was Friday's trading day. So price opened here and moved higher, then crashed all the way to this low, retraces and closed here, you see. So that's a daily time frame. So that whole candle represents 1 day of trade. So you can move in between the time frames. You can go to a weekly chart. So that means every candle that you see on this chart here is a weekly candle, the opening price of Monday to the closing price of Friday. So you also get M5, M15, M30, H1, you see. So that means every candle represents H1 price movement. Normally, with the concept that we use to trade, which is institutional supply and demand, we don't usually look at M5 or M1. Yes, M15 we use it to perfect our entries, but it's not part of our analysis. It helps us in increasing our reward ratio when we take our trades. So our main time frame that we focus on are the higher time frames from monthly up to H4. So those are your time frames. So you must know that every time I say, okay, we are on a D1 chart, highlight for me the channel on D1, then you should be able to do the same. Now up here we've got the chart types. We've got bar charts, we've got candlesticks, then we've got a line chart. Right, our main chart type for analysis is the candlesticks. Right, we use the candlesticks for our analysis. Right, I'm gonna go to a weekly chart. I want to highlight something for you guys so that you know the tips and tricks. Right, I'm gonna go to a line chart. Right, let me change the color of this line chart. I need it to be red. Right, now the line chart, you're gonna find out that from a higher time frame point of view, it's gonna help you to determine where the market is or what bias you're gonna be looking for in the market. Right, this is the only time that we use the line chart. If you are going to follow the same concept that I use, the only time you are going to use the line chart is either on a weekly or on a monthly chart. We don't use a line chart on a daily time frame. Now, why is that so? Right, when you look at this chart, look at every high or every low point. Look at this high, look at this low, look at this low, look at this low, look at this high. Right, now let me show you something interesting, something that you're gonna need to be able to be doing on your own. I'm gonna go to my horizontal line 2, then I'm gonna highlight this high here. You see, I've highlighted that high. You can even see now, if you look to the left, the line crosses this high, then we've got another high there. Then I'm gonna come to the low side, I'm gonna highlight that low. Right, now I'm gonna grab the 2 again, I'm gonna highlight this high. Right, I'm gonna grab the 2 again, I'm gonna highlight let's say this guy. Now can you see how it's pinpoint accurate to the point where the line meets? You see how accurate it is. Right, now once you have done that, you see, once you have placed your supply and demand lines or support and resistance, whichever way you want to refer it to, now take note, I'm going now to switch to my candlesticks chart. Watch what happens there. Now look how the line graph disregards the wicks. Remember this, I placed this line here at the highest high, but we've got these wicks here. Can you see? I placed this line here at the highest point, but we've got this wick here. I placed this line at the lowest point of the line graph, but we've got this wick here. Look, we've got the wicks. So the line graphs gives you a clear pinpoint to the closing price of that high. You see, it disregards the wick. That helps you in determining perfect price points. You see, it helps you to determine the perfect price point. So that's the only time you're going to be using line graphs. You see, so for now you could have clearly say, okay, I'm on a USD CHF chart. This was the high and this was the low. You see, already you can see 0.9760. It becomes your area of interest. Then you can clearly see 1.1019, which you see, guys, this number rounds up to 1.020. You see, that becomes your area of interest. Same applies with this here. Your area of interest now becomes 0.993. you already know, okay, that's the price level I'm looking at. You disregard the other noise that's happening on the wick, you see. So you get clear price points on the chart. So that's the only time we're going to use a line graph, is for us to get a clear guideline to the price areas that we are looking at. Next to the chart types, you've got the zoom in and the zoom out options. You see, this is your zoom in, zoom out to see more information. Then you've got this one for the multiple charts, when you want to see multiple charts on the chart. And then we've got the scroll to the chart to end on tick incoming. This guy takes you to the end. See, this guy takes you to the back. So this is for scrolling. If you untick here, then you are able to scroll on the chart without the chart instantly moving when the candle closes. You see. And then this one here is for the indicators. We are not going to be using much of indicators in our analysis, but it's something that you can explore on your own and play around with. I know some people, they are good at using indicators. Personally, I'm not a fan. And we've got the time frames again here repeated, and then we've got the templates here. This is more of the advanced part. I'll be showing you how to create your own templates. And for those that were not in the class for the MT4, this is basically for you guys, so that you get a rough guide of how to navigate the platform. You see, you go to your daily time frame, you zoom in. If you want to open a new chart, you go file new chart, then you choose which chart you want to look at. You see, if I say, okay, let's go to a H4 time frame, then you can click on the H4 time frame, then you go to a H4 time frame. As much as I always emphasize it, guys, some people, they like to trade on their phones. Yes, that's a personal preference, but since you are still beginning, I urge you to use the computer more often. Use the computer for your analysis. Then that time when you're not on the PC, you can monitor your trades using the phone. Trading on the phone as a beginner is not a good idea. Yes, some people prefer that, but you don't get to see much information, right? So yeah, that's much about it when it comes to the MT4 platform. You see, the basics that you need to know at your fingertips on how to navigate the chart, how to draw your trend lines. You see, it's things that you have to understand, and you just practice on it. You're not going to lose money by playing around on the MT4. Practice, use your demo account, practice to play around, moving in between time frames, linking those time frames to your same analysis. If your bias is bullish, link your H4, your D1, your H1 chart together, right? So that's much about for those that missed the MT4 introductory lesson. Then last week we talked about candlesticks, right? Last week we talked about candlesticks, right? Where's my line 2? Now, candlesticks are going to be the most chart type, or not even the most, that's the chart type that we are going to use, guys. Reason being that candlesticks, they tell us more information of what price is doing. You see, you get to see like who's in control of the market more than the other. What is the market doing? Is the market trending? Are we in a ranging market? You see, are we in a bullish market? Are we in a bearish market? That comes from us reading the candlesticks structure. Now, a candlestick is made up of I would say about 5 core items. Right, I'm gonna illustrate a rough guide of a candle here. Right, and I'm gonna highlight it there. Right, so this is a bearish candle, right? We've got a bearish candle, right, illustrated on the chart. Now right, we've got this price point here, then we have this price point here, we've got this one here, then we've got this guy here, and then we've got the body of the candle, right? We are talking of the candle here. So you can clearly see there's 5 core items that represent a candle. The top part, this is your highest point, right? This is where the price rallied to and created a high. The lowest point, that's your lowest price. That's the lowest price that that candle reached. If this is a 15-minute candlestick, it means price reached this lower area here and it created that low. Remember, this is a bearish candle, so this is going to be your opening price. You see, this is your open, and then you've got your close here. So this is your close, this is the body. You see, this is the body of the candle, right? The bigger the body of the candle, the stronger the momentum. You see, if you get a big bearish candle to the downside, for instance, in this case here, in this case here, in this case here, market will continue to move to the downside. In this case here, probably market is still gonna continue to move to the downside. You see, so the bigger the candle, the stronger the momentum in the direction of the candle. If it's a bearish candle, then the momentum is strong to the downside. Now the opposite applies when you talk of a bullish candle, right? I'm gonna illustrate a bullish candle now. It's too big. Let me illustrate a bullish candle for you guys. My price points are not exact there. Right, so we've got a bullish candle here. Take note how I'm illustrating them. Bullish for me is green, bearish is red. So this is a bearish candle. Now I'm gonna highlight this one, this area, and then this area, and then this guy, and then that guy. Right, so you can see we've got the same core items as on the bearish. So this will be your highest high. You see, the highest price point which the candle reached. Remember, this is a bullish candle, so market is moving to the upside. A bearish candle, market is moving to the downside. And this is the body. You can clearly see this is the body of the candle. This is the lowest point. You see, that's our lowest point. Now in the case of a bullish candle, this now becomes your opening price. So this is where market opened, and then this is where market closed, because prices are moving to the upside. So they're gonna open here, and then they move high, and they close high there, right? Same principle applies. The bigger the body of the bullish candle, the stronger the momentum. In the same case like here, same case on this guy here, same case here, same case there. You see, market pushed. Strong big candle, market pushed. Strong big candle, market pushed. Strong big candle, market pushed. You see, guys, so it's of great importance that you are in a position to read what the price is doing, and the way you can do that is by reading the candlesticks. You see, take note of what the candlestick is telling you. Don't come up with your own price which are not derived from the market. You see here, like this area that I've highlighted, that's a ranging market. The moment you see that, forget about it. There's nothing there for you. There's no opportunity there for you. But the moment you see this, you see these big candles, you see, then you know there's gonna be good opportunities, especially when you get those candlesticks when you get those candlesticks at an area of interest, say a strong supply area or a strong demand area, you see. So you must be in a position to know. You see, like this guy here. Okay, let me just clear up the screen a bit. You see, you get this big body candle here. Probably there's a strong area of demand. Market rallied and never looked back. We've got a big strong body here. Market tumbled, never looked back. So you must be in a position to see that. You must be in a position to read that kind of a structure. When there's clearly no direction or no price movement on the candlesticks, then forget about that asset, because it's not moving. You wouldn't want to trend in a stagnant asset. You want to be in a market which is trending, market which is showing you a direction that, okay, I'm rallying to the upside or I'm rallying to the downside. Right, I hope you understood the structure of the candlestick. Now we are going to talk about two of the most important candlesticks that we will be using in our analysis. Right, and those two candlesticks are bullish engulfing and a bearish engulfing candle. Right, now what do we mean by a bullish engulfing candle? Right, a bullish engulfing candle in short, a bullish engulfing candle in short sorry about that, guys. Nature had called. Sorry. Right, a bullish engulfing. This engulfing is a long candle with a body that covers the preceding candle's whole range, whether it's a body or a wick. It engulfs the prior candle or candlesticks. Right, let me illustrate that this on the chart. Right. Oops. That is not right. Right, we've got a candle there, and then we get another one there, and then let me make them different colors, because since we are talking of bullish engulfing, so this happens during a downtrend, so you are expecting market to be bearish, so you get a bearish candle there, and a bearish candle here, bearish candle there. Now I'm going to have my green candle. Right, now you can clearly see that this candle here, it has engulfed this range. You see, the bodies of these previous 3 candles have all been engulfed by one bullish candle which is moving to the upside. That's what we call bullish engulfing. Right, so it doesn't have to be 3 candles to be exact. It can only be this candle on its own. You see, without these 2, this candle has engulfed this previous candle. Remember, market is moving to the downside, and then you get a strong bullish candle moving to the upside. That's what we call a bullish engulfing, and this signifies, mostly it signifies a reversal to the upside. You see, the likely implication of this is market is reversing to the upside. In other words, what we call a bullish reversal. You see, that's what we call a bullish reversal. Right, so a bullish engulfing in most cases signifies a bullish reversal in the market. It's at those areas that you are supposed to be looking for long positions. So imagine a bullish engulfing taking shape on a strong demand area. That's a clear sign that market is gonna push to the upside. Now let's see on the chart if I can highlight for you bullish engulfing. Right, we've got one here. What time frame are we on? We are on H4. Okay, let me go to a daily. Try to highlight your engulfing candles on a higher time frame, weekly, daily, and H4. This in turn is gonna help you to get proper entries on H1 or on H4. You see this candle? That's a bullish engulfing here. These 2 candles, the green candle engulfed the previous bearish candle when market was moving to the downside. After that engulfing, you can clearly see market rallied to the upside. You see, that's a clear bullish engulfing. It happens, it's formed during market when it's pushing to the downside, and then engulfs the previous bearish candle, and then market is gonna push to the upside. So that's a good clear example of a bullish engulfing. Right, this is on a daily chart. Let me see if I go to a weekly chart, if there we go. On a weekly chart, we've got a bullish engulfing here. You see, imagine a week has closed. You see, weekly trading closing on Friday, right? Then you see this candle closing up here, and it has engulfed 1, 2, almost 3 candles. It has engulfed 3 candles. What do you expect to do in the market in the coming week? Long positions. You see, they are all being supported by this strong push to the upside. You see, market has been trending to the downside. Then you get a bullish engulfing. You're taking the price higher. You see, then you have another one here, another bullish engulfing here. You see here, this is a bullish engulfing. This candle engulfs 1, 2, 3 candles. What did next week do? Market was pushing to the upside. You see, so that's a bullish engulfing candle. You need to be able to understand exactly the implications that it brings on the market. So now we are going to look at a bearish candle, right? A bearish engulfing candlestick. This happens during an uptrend. So what this means is you are going to be looking for a bearish engulfing when market is trading higher. You see, when momentum, when bias is bullish, that's when you expect to hunt for bearish engulfing. Why is that so? Because the implication that a bearish engulf have got is that market will reverse to the downside. So take for example, you highlight a bearish engulfing on a strong area of supply. Market will definitely give you good opportunities to go to the downside. Let me illustrate what it looks like. Bearish engulf. So market is moving to the upside. So that means you are getting green candles to the upside, right? Then you get one big red bearish candle that's gonna engulf all of them, all these candles that have been moving to the upside, all of them, or prior only just this candle gets engulfed, or maybe with 50% of the following candle. What do you expect price to do when it opens here? It will move to the downside. You see, so this is a clear, good illustration of a bearish engulf. You see, take note guys, there's one thing to highlight it theoretically, and then there's another to be able to identify that on a chart. You see, on this chart here, we are on a USD CHF weekly. Let me see if I can get a good example of a bearish engulf. Right, we've got one here. You see this candle here, it engulfed this bullish candle. Market has been pushing to the upside. Remember, you look for that when market is pushing to the upside. Market has been pushing to the upside, then you get a bearish engulf here. You see these two candles, there's a bearish engulf. What did the market do the following week? It tumbled. You see, market moved to the downside. Many people are going to say, but Ivan, that's a small move. Let me go to your crosshair, and then you see what I'm talking about. Market moved 85 pips the following week. Yes, of course, you're not going to get all those 85 pips, but you should at least get 40, half of that, during the following week, because you are trading to the downside. You see, it's that simple, guys. It doesn't have to be rocket science. So that's a good example of a bearish engulf. Same applies here. Market is moving to the upside. Remember, this is a weekly chart. Then you get this. You see, there's your bearish engulf. This candle engulfs all these guys here. Market push to the downside. You see, so it's not rocket science. You just have to be following the principles that I'm teaching you here. Then everything is gonna be easy. Forget about the indicators, forget about the robots and all that. You can do this quite easily on your own at your free time for the rest of your life. A robot is not going to last you. An indicator will always be misleading you. Look at what price is doing. There it is, engulfing candle on a weekly chart. 1 week took out 1, 2, 3, 4, 5 weeks of trading. What did the market do the following week? Tumbled to the downside. Prior to a move to the upside, you get your bearish engulf. You see, so it doesn't have to be difficult. The engulfing candle is a very powerful tool. The bullish engulfing candle is a very powerful tool that you can use in conjunction with supply and demand. You see, so what I would like you guys to do, you guys in my mentorship group, do practice on the charts. See if you are in a position to highlight a bullish engulfing candle pattern, a bearish engulfing candle pattern. You see, that way you tend to improve your analysis, you tend to improve your reading of the market structure. You see, that's the only way you can improve. So I have talked about 2 of the most candlesticks patterns that we are going to be using in our analysis. We are going to be meeting up again in the coming week. We are going to continue with this section here of how to read candlesticks and market structure. So I hope you go through the whole video and make an understanding of what I'm trying to explain. If there's stuff that you're not understanding, don't hesitate to get in touch, guys. You are in the group. Just hit me up, give me a message and all that, so that we move forward together.